Hello and welcome to Crypto Weeklies. In this video, we analyze Ethereum, none of the content financial advice. Right now, the Ethereum as a narrative has spiked up quite a bit, but it's not as big as the overall bearish narratives or also the individual narratives surrounding news related to crypto. So let's take a deeper dive on the narrative cloud. We'll start with the analyzing what narratives are popular right now. So Bitcoin being the most popular one, apart from that the US president, and then the bearish narrative and the bullish narratives are kind of fighting it out, but the bearish narrative is in the lead. You can see the narrative frequency in terms of the last 7 days worth of term frequencies on social media platforms such as YouTube and X related to crypto. The overall sentiment is largely bullish compared to the bearish narrative size. And then again, individual cryptos such as again the Tether and then ETH as a narrative has also spiked up quite a bit. If we go back to the analyzing the ETH overall sentiment composite risk based on all of our individual dashboard, individual model in a dashboard format, the overall risk is less than 0.3. So technically it's in an accumulation phase, as this accumulation zone would consist of anything less than 0.3 risk. But this comes with a caveat that most of the cryptos are right now on a hanging on a cliff, where again they are likely to follow more of a downturn in the next few months as estimated by past cycles based behavior. So let's take a deeper dive on that one. So these are the monthly candles for ETH. You could see that this yellow zone over here, which ETH has managed to stay at the middle part in February as well as in March of 2026 in the last bear market, and also in the middle of that panic dump in April 2025. The lower part of the channel was visited. The lower part of the channel back then was at around 15, so less than $1,400. Right now, if the price were to go back to 1570 or in the next few months going close to 1600, that would be the bottom of this channel. And again, as these channels are tested, this ascending supports are tested, the likelihood that they break down to the downside is higher than they continue to fall, continue to find support from cycle to cycle. That's just the nature of the trailing support based lines. They hold as support for a brief period of time, maybe one cycle or two cycle. Eventually they find a bottom which is significantly lower than this support over here. Not to sound too much bearish, you can see the bear market, compare the bear market from the last bear market and this bear market. We are over here since that October November 2025 peak, 1 2 3 4 and now 1 2 3 4 and now fifth month, so that is November, December, and then the 3 months in 2026 have been bearish. For context, in the last bear market, I know the bull market looked a lot different in 2020 to 2021. So apart from this 1 month over here of July 2021, essentially the bull market started from May 2020 and lasted all the way through December 2021. So almost 1.5 years. Whereas over here it was kind of sporadic, but the total number of months bullish were about the same. So over here 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19, and then 20 21 22 23, that's almost 2 years, and then 24 25 and 26, so little over 2 years over here. And compare that to the last recovery. Since the last recovery, again this was almost 18-19 months over here, then 20 21 22 23 24 and 25, so almost the same number of months spent in bullish seasonality. So after that, in the bear market, since January 2022 began till about December 2022, so almost 1 year or 12 candles were bearish. So if ETH were to have similar 12 candles which are bearish from November 2025 to November 2026, I would imagine again the last 4 or 5 candles do not matter that much, because it's essentially testing out a double bottom. So ignoring the last last 5 candles, like 1, 2, 3, 4 and 5 over here, major damage occurs before those last 5 candles. So let's say month number 7, so right now we are in month number 5, so 2 months later, whatever panic drop occurs in ETH at that time would likely be a major panic drop, and to the other side there might be some sort of a recovery, although the color of the candles would be, again, the momentum candles would be red. But if you switch back from this Heikanhashi based momentum candles to the regular candles, you would find a different story, but with a similar caveat that whatever happens in that 1, 2, 3, 4, 5, 6 and 7th month makes the most amount of sense with respect to the ETH bottom. So we are over here 1, 2, 3, 4, 5, 6 and potentially the 7th month in terms of the regular candles, which have been bearish since September 2025. But with respect to the Heikanhashi based momentum based candles, we are in month number 5 of the bear market, of the momentum based bear market. So again, couple of months here or there, maybe towards the end of May 2026, that's where there might be a likely panic based drop in ETH. If I were to guess, the first area of support would be at around $1,600. If that goes away, and then and we have to retest some of these price action over here between $1,300 and $1,400, that's the panic case scenario for ETH at this point. Coming to our own website, CryptoWeeklies.com, as the composite risk is at 0.28, if we were to try to extrapolate what would be the diminished decay based worst case scenario for ETH, this is at around $1,500. That's the 2 standard deviation residual band, and the 3 standard deviation is, again, ETH hasn't seen that any time. The closest that it has come was in March 2020. If something similar were to happen to that panic based drop, then the worst case scenario for ETH is just shy of $1,000. Barring that panic case, the likely zone of support for ETH is at around $1,500 based on this decay model. In terms of the OHLC, or the open high low close technicals based normalized risk, ETH risk is at around less than 10%, but at the bottom, like it was in April 2025 or in February 2026, less than 2% or even less than 1% risk is where the bottom for ETH occurs. We haven't seen that yet for this bear market of 2026, so that is still again might likely manifest in the later half. With respect to the time weighted average price model, this is the all days ETH has traded average price of all of those days since 2017, and instead of looking at a price with respect to a current or a simple moving average based deviation, this is the entire gravity of time and looks at current price through the lens of where the asset has spent its entire life. So if the accumulation is occurring where the below the white line, which is again when the price is lower than the white line over here, you are essentially beating the clock by entering at a level where the market has historically spent very less time. So again, around the time weighted average price is where the price is in its natural state. That means it's not too overhyped or ignored. This is the baseline created through years of worth of trading for ETH, and overvaluation is again when risk levels are again between 7 or higher, between 7 and 10. So that's where again it becomes more of a scenario where distribution is occurring, and let's say risk level 7, that's where risk level 7 and 8, that's where the peak for ETH occurred in the last bull market. Maybe next time around risk level 7 might be the peak as the volatility diminishes to the upper side. So coming to where to accumulate ETH per this model, whenever the risk levels is 1 or 2, that makes some interesting time. Right now it's in risk level 3. there is a difference of about 21% between the price and the time weighted average price. The time weighted average price is at $1,700. The price is at around $2,000. For the longest time, ETH managed to kind of evade the drop below the time weighted average price. I'm not saying that it cannot happen this bear market. The last time ETH spent multiple number of days or weeks below the time weighted average price was in 2022. So potentially in 2026, as the time weighted average price keeps on grinding higher and higher, the likelihood that in the bear market the drop occurs below the time weighted average price becomes more and more realistic. Again, one could estimate what that drop could look like through the lens of not the last bear market, but the one in 2018, 2019, where again in the initial drop of the 2018, the drop between the price and the time weighted average price was about 40 to 50%. In the panic scenario of 2018, it was at around 83%. That's kind of unrealistic to expect at this stage that ETH to drop 80% below the time weighted average price, but again 30 to 40% drop over here might be realistic. Let's say if the time weighted average price at that eventual market cycle low is at around, again this is growing function, so right now it's at around $1,700. let's say, and at that point in future the time weighted average price grows up to $2,000, and a 30% drop on $2,000 would be taking $600 away, and at that point this if the price were to drop to $1,400 when the time weighted average price is at around $2,000, that would be a 30% drop. A 40% drop would be if the price drops to $1,200 when the time weighted average price is $2,000. So that could be a scenario for ETH where the price kind of settles below the time weighted average price. But through the lens of accumulation, again, if let's say on the other side of recovery for this asset class, where ETH has held the number 2 spot for the longest time, it has been the number 2 crypto by market cap at least since 2020-2021 time period. So let's say in 2027 or 2028, if ETH risk goes to risk level 7 or higher, accumulating at risk level 1, again not financial advice, in the depths of the bear market would through that potential hindsight based outlook would not be the worst time. So where is the risk level 1 per this model, again slightly higher than the time weighted average price, as at that February 2026 drop, when the difference between the price and the time weighted average price was only 7%. That was one area in that early to late February drop. This model is live, so you don't need to wait for any YouTube video for it to trigger your own analysis on with respect to the time weighted average price based accumulation. This link over here, as one would suggest, one could find over here, it's in top 20 cryptos by market cap under the time weighted average price model. Again, with confluence with that diminished decay and time weighted average price, both these models are pointing to an undervaluation zone, at least undervalued with respect to that 2300, not just the fair value, the regression based fair value that is, but also undervalued with respect to the 1 standard deviation residual drawn from that fair value. And in tandem with that, if and when ETH becomes undervalued with respect to the time weighted average price risk, that is less than risk level 1 or close enough to risk level 1, accumulating at that time would be again a great time. So where are we with respect to the regression based model? Again, we just saw it at a using the candles. This is the regression based risk using daily average price. The risk is at around 0.29, so it's not quite down over here. The worst case scenario for ETH is if it goes close to that 0.1 risk, which is at around $1,400, and again if there is a full blown recession, then $700 could come into play per this model. The machine learning based model says that again, if there is going from weekly average price going from 2017, almost 9 years worth of data since, and using seasonal ARMA based time series based forecasting and LSTM based machine learning based model. It says, let's say from April, again we don't know the exact time when the couple of bearish months might be ahead of us, but let's say timeline to be decided. From here, if there are 2 months where the price action has to go down, but the non-panic based floor for those 2 months, let's say from starting late March to late May, then with 2 months of bearishness without major panic involved, the floor for ETH is at around $1,500 at a weekly average price. If there is a major panic, then the floor goes from the current price to about $1,000. So $1,500 without panic, $1,000 with a panic scenario would be the ETH floor for this cycle, as estimated by this machine learning based model. All in all, if you were to tune out individual noise, again this model says that $1,500 would be the worst case scenario, whereas any time accumulation below $1,800 would be kind of a decent buy zone. For the other side of this is, if let's say ETH recovers and then the overall asset class flips bullish, the base peak forecasted for the next cycle is at around $8,600. If ETH floor is at around $1,500 and the ceiling is close to 9,000, then it's essentially a 6x. If the peak is closer to $11,000 or $10,000 from the floor of about $1,500, that's 7x, and close to $14,000. That's the stretch goal for ETH. It's roughly speaking 9x, or like a little over 9x from the floor at around $1,500. With that, I'd like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.